How does angel investing help investors and entrepreneurs in Canada? Welcome to Tea at Taxevity, where you get insights from insiders who make life better, our many clients and friends. I'm Pramod Sharma, the actuary at the Taxevity Insurance Advisory, and when I'm not doing interviews, I'm helping people transfer risks with insurance. Our guest today is Gerard Buckley. Hello, Gerard.
Pleasure.
Now, when you're not being interviewed, what are you doing?
So, quite a number of things actually, but the focus of my activities are so I'm the founder and CEO of Jaguar Capital. Jaguar Capital is an advisory practice for growth stage companies in the areas of governance, financial management, and funding strategies. But besides that, I also chair the board of Maple Leaf Angels Corporation, which is a group of 55 accredited investors, and we invest in innovation. So I lead there, and we help move connect our investors to the best companies in Southern Ontario.
Because I've heard of the term angel investing, and it sounds really nice. It sounds like these really nice people are coming to help provide money, and I'm sure that that's part of it. I'm just hoping that you can help us understand angel investing better. So basically, what's the idea?
So first of all, the first idea is angel investors are a group of high net worth individuals, or a group of accredited investors as defined by the Securities Commission, to invest in private companies. But they're not only investing in any type of private company, they're investing in companies that have the ability to scale to the next level. So although the investor is looking for the opportunities to find very progressive companies and progressive entrepreneurs, the reality is at the end of the day, they would like to see a return on their investment. Notwithstanding, the angel investor is a person that is able to give value back to the companies through advisory work, and generally has a expertise in the vertical of the business that they're investing in.
Now, that's one of the things that surprised me, is that the client or the applicant isn't just getting money, they're also getting advice.
Many of our members, like of our 55 members, we got everything from people who have exited 2 or 3 businesses to people who have exited a career on Bay Street, PhDs, people with health backgrounds, science backgrounds, business backgrounds. So of our 55 members today, a very diverse group of people. And that's the 55 members in Maple Leaf Angels. Across the 2,100 investors that have invested in angel groups last year, the fields would be as wide and varied, from Western Canada, which have oil and gas experience, to Eastern Canada, which will have resource-based experience, as well as in the center of Canada with tech and healthcare backgrounds.
Okay. How does angel investing differ from venture capital?
So the biggest difference is that angel capital is either the personal net worth of the individual or family assets, where venture capital tends to be institutional money. So when it's institutional money, a venture capital firm, they're in it as a business, the investment as a business, where angels tend to be in the environment of bringing personal expertise to the table, and definitely their own personal assets.
Okay. And how big is angel investing in Canada? Do you have a sense of the numbers?
Well, on a total basis, so organized angel networks in Canada represent only about 15% of the total. So there's probably about $1 billion in angel investment in any given year. Notwithstanding, if you look at the statistics for 2013, there was about 200 deals done by angel networks in Canada for about close to $80 million last year. But that's direct investment. And those numbers usually leverage up on government programs such as Investment Accelerator Fund, IBI, the Invest in Business Innovation by FedDev. These programs help the entrepreneur leverage up the direct investment to sometimes 2 times, if not 3 times, the amount of investment that's seen from the angel groups.
Okay, angel investing is much larger than I would have expected. It's really nice to see that there are resources to help companies grow.
Absolutely, but small business in Canada has been really become the economic driver. Government realized that where the jobs are created with small business. Some people say that as much as 90+% of the growth of employment growth, as well as business growth in Canada, is represented by companies with less than 100 employees. And if that is the case, they're putting their money where their mouth is, and our members are doing the same.
And that's terrific to see. What's the best time for a company to apply for angel investing?
So we really look at 4 parts of a company that are very important. So first of all, we look at the how's the company disrupting the market? What problem are they solving in that market? And of course, the secret sauce or the unique selling proposition of the company is what kind of product are they creating? How are they doing their development? How are they solving that problem? And of course, the third level is the strength of the team. And then, of course, the fourth is the business model. How are they going to make money? So we often look for, obviously, the team is always in place. And we look for a validation of the first 2, the disruption in the market and solving the problem, as well as how have they developed their product and have they been able to validate it. So oftentimes we are at the stage of developing the go-to-market strategy when they're looking at creating a sales strategy, a go-to-market strategy. So that is oftentimes when we're financing a company, which is often considered at the seed level or the growth level for the company.
Okay, and is there a charge to apply for money?
At Maple Leaf Angels, currently there is no charge. You will find from time to time across the country there are charges. We don't charge for application fees. We don't charge for presentation fees. We don't charge for performance fees like you would see from a shall we call it a boutique investment banker. Government helps us put our operations in place, and it's a part of the facilitation of innovation in Ontario and in Canada.
I want to get a sense of how successful applicants are. So if 100 companies have applied, then do you have a sense of how many typically get money?
Well, in Canada, only 5% of companies that apply generally get funded. The number is even more quantum in Silicon Valley. But in our own group, Maple Leaf Angels, we see about 250 applications a year. Our investment review committee would see another 30 or 40 of those 250 companies, and we present about 12 to 15 companies a year to our group, and we would invest 4 or 5 in a given year.
Okay. Why would someone want to be an angel investor?
Well, that's an interesting thing. Obviously, the first appearance is an altruistic view to be able to actually give back. Most of my colleagues at Maple Leaf are very fortunate in their own personal careers and want to give back. But it's more than that. I believe we all want to go into our later years being fully engaged mentally and being very active. And one of the things that angel investing has given me to learn so much about businesses that I never knew while I worked in my full-time corporate investment banking career. I've learned about parts of healthcare and technology and social media and way beyond what I ever thought that I would ever learn from any schooling kind of environment. But at the end of the day, angel investors invest for a return of their capital and a return on investment. So at Maple Leaf, we've had 6 exits since 2007. And at the end of the day, we're looking for a positive return on our capital.
Okay, and how many years typically pass before an exit?
Well, sometimes you get lucky, and sometimes you have to wait a little longer. So they used to talk about the average being 3 to 4 years, but in reality, it's closer to 5 to 8 years. However, I just seen or our group's seen an exit this week, and that was the first investment went into that company in 2011. So the reality is that was only 3 years, and it's progressive investment through the process. So it depends. Sometimes you get very lucky, and it happens within 12 or 15 months. But the reality is, it should be preparing for it to be patient capital and be employed at the company somewhere between 5 and 8 years.
Okay, so the angel investors tend to be patient. They're not trying to drive the company to do things before the company is ready.
Not at all. In fact, we would be the other way. We want to make sure that the company is growing at the right level. We want to make sure the company has 18 to 24 months of runway from the capital that we give them. We are wanting to make sure that we are providing advice, that we are working with the company to meet their milestones. We want to ensure the success of the company. We're not looking for the company to push the level of growth beyond their ability to scale, but we are looking for the scalable type of businesses. But there is a whole host of things that has to be done to grow in a very methodical way, have the product ready, etc. And that's why our members always like to actively engage in the company as either a mentor in the earlier stages, a member of the board of advisors at the middle stage, and as the company forms their board of directors, to be represented there as well.
An angel investor is an accredited investor. Can you tell us what an accredited investor is in Ontario?
An accredited investor, defined by the Ontario Securities Commission, is basically a person with $1 million of investable securities, is one definition. Together with their spouse, has net worth of $5 million, or has annual income of $200,000 by themselves for 2 years running, or with their spouse has annual income of $300,000 for 2 years running. So there's a whole host of other definitions of accredited investor. However, those are the ones that are most of our members are under the definition of.
Okay, and we're recording on October 30th, and today you've got an announcement of something called MLA 48. What is that about?
Well, we realize that we need to see good companies early. And it is a Maple Leaf announced this morning and this week a fund. And that fund is basically a fund that is invested by our members, but the intention is to provide early stage financing. So the big trick is understanding when the company is going to scale. But we all want to get introduced to the very prospective companies early. And this is a way to have a formal relationship with those companies. So we would invest up to $60,000 from our membership. And in addition to that, we would also see government programs leverage up that financing for between 110 to 200,000. But we want to make a difference in the marketplace. This is the first fund of its nature created by an angel group in Canada. And we like to call it by angels, for angels, and with angels. One of the key components is we provide advice to the company. And it also gives us a first right of refusal to be engaged with the company at their next level of financing. So the key is, when do you write the second check? But by investing initially in the company, now you have a partnership. Is more than just showing up on the door and saying, what are you doing in 2 or 3 years? It's now we enter into that relationship, and we realize that will require mentorship at their early stage companies. As people will be going through the product design stage, looking at their addressable market, all of these kinds of things our members will be actively engaged with the company with.
How were you able to give a response in just 48 hours?
Well, we knew it was a challenge for companies that they can end up waiting for months, sometimes for sure weeks and sometimes months for an answer. We basically front load our due diligence, but the due diligence you're doing on a company like this is the kind of things you do on the team, the entrepreneurs. What's their background? What's their experience? Then we look at at their idea, and is this a good idea? Is the idea scalable? And do we believe this company has the ability to create the product that they're destined to create? So because it's such an early stage company, the due diligence is much less. So we will have a very much a structured term sheet, as well as a structured due diligence process. It will be front-ended, but so the part that makes it good, when they present to our investment committee, we will take only 48 hours from the moment they present it to that investment committee to make a decision whether we're going to invest in that company.
That's terrific to see that kind of speed, because I'm sure the process of waiting months is very aggravating and could be very disruptive to companies that are simply in the process of trying to grow.
Absolutely. And, I've heard reported by entrepreneurs that they've, knocked on 40 odd doors before they actually find financing. And we realize that if we're going to make a difference, we as an angel group have to keep consistent. We have to change with the times. We're now getting a lot more investment out there online through processes like an Angel List and Funders Club. In Canada, we have similar portals that are starting, as well as the whole concept of crowdfunding as a bonus. We know we have to change. We have to have a value proposition for the companies that we talk to, and this is part of the motivation for us introducing MLA 48.
Mm-hmm. MLA 48 looks like a way that Maple Leaf Angels is different than other angel investors. Are there other differences?
Well, first of all, we've been in existence since 2007, so we're one of the earlier groups to establish. We established before the downturn.
Oh, yes.
So we've kept in the business for that period of time. We've done 23 deals since that period of time for over $12 million. We also, with our exit that we've received this week, we now have 6 exits in that period of time. We're also Toronto-based and somewhat Southern Ontario-centric. Some people like to think of us as Toronto's Angel Group or the Angel Group from Bay Street, but notwithstanding, we have investments in Ottawa. I personally have investments in Atlantic Canada as well. I have some background there. So in other words, although we're focused on Southern Ontario and most of the companies have a presence in Southern Ontario, we have done investments in Ottawa, other parts of Ontario, as well as I personally have done investments in Atlantic Canada.
That's interesting. What's your key message for our viewers today?
The key message for entrepreneurs is we understand the environment has changed. There's change in this space, and we are addressing that change. We understand legislation is coming. We're going to have crowdfunding. Our group, Maple Leaf Angels, and through our investors, want to be responsive to those changes. But on the other side, we also want to ensure that we are a progressive place for our members, our investors. So as an example, with MLA 48, it's probably the first fund created in Canada where there's no management fee and there's no carry interest that's paid to the fund.
So can you just explain what those management fees and carry charges are?
Well, they're typical things in the venture capital space.
Okay.
2% is usually a management fee, and 20% is often the interest carrier or the part that the venture capital firm takes away from the investment before the investor gets rewarded. And in our particular case, we represent a group of investors. So any investor that invests in this fund will get 100% of the investment returns less some direct cost of the fund as the investment return. So the fund is not capturing a portion of the return. Our members are the investors, so therefore they get the significant majority of all of the returns.
And that looks fair. What's the best way for people to reach you?
Me personally, you can follow me on LinkedIn, Gerard Buckley, and in addition, I'm at Jaguar Capital on Twitter and at Gerard Buckley on Twitter. But through Maple Leaf Angels, we're at Maple Leaf Angels as well as at MLA 48LP. So I'm active. I have a blog on itbusiness.ca as well as write articles on governance on LinkedIn. So I'm not hard to find.
And that's great. It's nice to find people who are easy to find. Thanks for dropping by, Gerard.
Thank you very much.
Thanks for joining us for Tea at Taxevity. The Taxevity Insurance Advisory helps you understand insurance and bridges gaps in your coverage. There's no premium for peace of mind. How healthy is your insurance?